Hello everyone, Nick here. Wanted to touch base. We hit all-time highs. About time to do a little video recapping the week, taking a look back as to where we are and see what's probably coming in the next few days. Alright, so first of all, this is the S&P E-minis, so think SPX, only this is the futures contract. And we've been tracking that white line. We said that we had a pinch in the range, a breakout or breakdown. Breakout happened. So we are in uncharted territory, but based on the pattern, this is the outcome that could happen. I know it's a little scary and crazy, but let me put it in easier terms to see. So this is the S&P. Same chart, only via the SPY, which is the ETF. The SPX is the index, this is the ETF. Same squeeze. These lines I shared a while back. I didn't know what was going to come true, but I laid out my options. If it breaks down, this was going to be the path. If it broke up, this was going to be the path. Look at the price action. It was exactly how we drew it. It failed here and here. Here it failed because of a Trump tweet right there, 10% on 300 billion. And then another tizzy right here from China's retaliation. Remember, they waited a long time before they did it. So two pieces of news that foiled the rally up here. By the way, if I zoom back to October, we had similar setups too, where we had a rally, it got foiled on a headline. So here we are, attempt, foiled, attempt, foiled, and I can't remember here, probably some inversion or something, where CNBC will go out and say, markets in turmoil. They make up stuff. They literally make up stuff. They're in the business of doing headlines, because if there's no headline, nobody watches CNBC. So they literally make up stuff. Anyway. Regardless, the price action is what it is. We finally broke out. What usually happens? What usually happens when something breaks out? You've seen it 1,000 times in all the charts that I share. You can go back in time and see it, and I will show you. So this has been a neckline zone. We finally broke out. We tested it, and we rallied. They might test it again. And if it holds, then it becomes the baseline for a whole new set of price action. I know it's crazy. 3,200 on the SPX is not that crazy. It's only like, what, a few points away from here. People are shocked when I say it. It's doable. All you need is these guys to shut up for 2 weeks, and we will be there. People say it's impossible. Mute all news. It is highly likely. It is improbable that it doesn't happen. The P&Ls are coming in from the earnings reports super strong, from all of the tickers that matter. We have a few pitfalls here and there, but overall, the earnings are better than expected. Sure, some people lowered the bar, but that's part of these things. These happen when they lower the bar. So these are incorrect because somebody goes out, reports, and says, I want to be cautious going forward, so I'm going to tell a negative story going forward and guide soft. The markets fall, and then we recover. And then finally, timing and all of that, and the earnings all falls into place, and quiet politicians, we're above. Okay, so has this happened before? Sure. So where's that? My eraser. All right, hopefully this video doesn't turn out to be longer than I want. Okay, so here is a neckline. I charted it, and I said it's going to here. It unfolded perfectly. They broke out, came back, tested the neckline, if you extend that blue. And then they tried to test it again, and then they took off. They met the goal almost exactly before they failed on the tweet. Amazing how news knows when to break out. So I've read that the president has a team of technicians working for him. I don't doubt it. So the tweets are well placed. And same for China news, same for all the politicians that are out there. They're all manipulating our lives, guaranteed. Okay, so regardless, they can't manipulate the charts because the charts are agnostic to headlines. They don't care where the headline is. And so this is why I say turn off the news, and I would be a better trader, because then I would make decisions based on the price action at hand. Who shorts this? If somebody didn't tell me what it is, they say, would you short this chart? Heck no. I would say, I wouldn't buy it because I missed the breakout, but it's too high, too hot to short. It's too high to chase and too hot to short. So people start shorting just because we're this high. It's crazy. It's a bullish chart. This is a bullish chart. All right, so this is the SPX. So let's look at the Qs, which is the ETF for the NASDAQ. This, again, I charted with this red line breakout and this red line breakdown. They tried to break it down. They didn't. The buyers are in control. What happened? We broke out, dipped a little bit for that second leg, and then exceeded the goal. So if I go to SPX, I'm sorry, NDX, did I have any lines on that? I did before. So both came true just with time. So these are all in a breakout. So here's a breakout right there. How far does it go? Usually it goes as big as this. I'm just saying. So there's no reason to short with that headline. Now this is the small caps. This is a different story. So we have, this is the small caps index, the RUT. This is a basket of 2,000 stocks, basically, of about 4.5 up to 5 or 6 billion, but I've seen them keep companies bigger than that in market cap. So they're not tiny. They call them the small caps, but they're big companies. So what's good and what's bad? What's good is that the buyers are in control. I'm going to go to a year's worth of data. There we go. The buyers are in control. What's bad? They've been in control before, and look at what happened. They've been in control, and look at what happened. So this one is, if somebody says, would you go along this chart? Forget what it is, what we're looking at, what headline is coming, who's reporting, this is a chart. Forget the name. It's a daily chart. Every candle is one day. Would I go along this chart? I would say, here's exactly what I would say. The chart looks frisky. This close is super bullish because this candle, this green candle here, means that, where is it? Okay, this green candle right there means that they opened and they rallied and they never took a breath. The whole candle, there's no tail. Like this one, there's a tail. They opened, they fell, they bounced off the low and closed somewhere in the middle. Okay, so this is, they opened, they rallied, and they faded. This one, Friday, they opened, they rallied, and never looked back. So, pretty strong candle. But here's the rub. If I look left and left, okay, let's get out of this magnifying glass here. Gone. All right, so if this is where we're at. If I look left, major fail. So I'm going to call it resistance. And then right here, still resistance. And right here, still resistance. All of this, these are fails. Resistance. Look at that. There's more. So no wonder I drew this red box a while back. Probably somewhere here. Because we entered the red box. This is like they entered and they haven't scored a goal yet in football terms. So they're in the red zone, literally, and they haven't scored a goal. So onus is on the Bulls to go above it. This close, theoretically, is above these tails up there. So this is a higher close than here. Somebody could argue that this was the neckline and they're already in a breakout. For me, if I had to lay, thousands of dollars on a trade, I need more confirmation. I would rather miss another dollar or two or three to see this. I want to see them bounce at least once or go across it with another candle before I chase it. However, okay, if they do break out, it's going to be good because here's why. I need more room. Okay, so now we're going to talk technicals after this call. So the robocalls are insane. All right, so technicals. This is a neckline. Now, if you're a technician, you're probably going to have beef with what I'm saying here. Maybe not. Anyway, you've heard of head and shoulders. This is the spirit of an inverse head and shoulders. Why do I say the spirit? Because it's not perfect. For it to be perfect, I probably need to connect these lines here, right there. And this shoulder is kind of wacky. So whichever lines you connect, I'm going to tell you my interpretation of it. There was a dip, whether you want to go all the way down here or not. And then, so the bulls were tired, the bears were winning, and then the bulls said, you know what, I can defend this. They pushed the price, they hit a wall, the neckline. The bears say, nope, not going through. They push them back even further, right, than this, even than that, or just as much. The bulls say, I can come back. They come back to the goal line. The bear said, we just did it here, we're going to do it again, and they do. But they fail a little bit worse than before. So they don't succeed as well. The bulls say, I can get back to it. If the bulls are able to then breach it, finally, that just says that the bears are just done tired. They're tired. So in spirit, they will overwhelm the bears and get above there. How far do they overshoot? Technicians will tell you they're going to overshoot by the deepest part of it. So up here. I know it's ridiculous, but these are the technicals, and they do play out. Okay, sometimes they don't play out 100%. Other times they do. I'm going to reset the chart because this platform doesn't have a reset button on it. Okay, so now this is the same chart, only weekly. These candles are weeklies. That's the same inverse head and shoulders I just told you about. That's the same red zone we're talking about. So the S&P is at an all-time high, brand new. This isn't. We are still well below the all-time high in the small caps. 8%-ish. Okay. I thought this red was going to come to fruition. It failed. So now I lean back on the fact that this red zone, oh my gosh, okay, so watch this. I'm glad I did this. I did not plan this. All right, so this is the red zone. Watch. This is the red zone if I extend it left. It was complete resistance and then a breakout, and then they couldn't hold it as support. Boom. And now it's resistance again. That's why it's onus on the bulls to take it back. But here's another thing. You get a rally. I expected an ABC like this, the red thing. It didn't happen. What if it can happen like this? A rally, a whole mess of consolidation to finish the job. Totally doable. Totally doable. But they have to cross the threshold. They have to cross the red line, the red box. It's not a line. So if I were to put a trigger, I would choose this candle right here. Gosh, I can't see anymore. $15.99. Let's call it 1600 for round numbers. Okay, because then I would have confirmation. They cross this, this, this. Then they only have this little guy. So I could wait to 1622, but that's 20 points. I could risk some money here with a tight stop. So this is the box we're playing with. So how would I chart this? I would chart it. I would put a box. Let me see here. I'm going to do it differently. So I'm going to do this, like that, and like this. It's not ideal, but it represents what we just talked about. I'm going to make it white so it's visible and fat. All right, so this failed. Maybe this won't. These two should be equal. They're not. Eyeball. But you get the point. So there will be resistance. There will be resistance here. There'll be resistance here. There'll be resistance here. And this whole mess of resistance up here. So this is a small cap. So the Dow, I cannot believe I didn't pick up on this earlier. One day, recently, 3 weeks ago, this happened in the Dow. Actually, I should go to a daily chart. You'll see it. Okay, so this is the Dow's ETF, the DIA. Oh, come on. This platform. All right, that's the same chart, the DIA. What the heck was that? I can't remember the headline. October 18th. Something happened. Check it out. Boom, out of nowhere, it exceeds everything here. What? I cannot believe I didn't go out and buy all the calls I could afford to buy. This happens. It happened in Apple the other day at 238.33. So I said, I'm going long Apple. It hit that and then some. It happened the XLF backwards. It fell $1 out of nowhere and just flashed it. This was a flash for only like a few seconds. Let me see if I can see it in a 120. There it is. So this is a 2-hour chart. Let me go to a 60-minute chart. There it is. So go to 30-minute chart. I'm going to have to move. There it is. See, this is not normal. People say, oh, it's an erroneous tick. I've seen them too often for it to be erroneous. This is literally proof that the markets are manipulated. This is a 15-minute chart. 5-minute chart. If I'm lucky, I'll find it somewhere. Anyway, so you see my point. Maybe we're headed to that point in the Dow. What could get the Dow up there? I lost it. Here's a chart that will get the Dow up there. I'm going to go to a daily. What is this? Boeing. Boeing has been in the toilet. Let's go Boeing. For good reason. So, and it's a heavy, it's $345. So the Dow is price weighted. The bigger the ticker, the bigger the weight it has on the index. So if this one moves a 5%, it's different than a smaller stock in the Dow moving 5%. Home Depot, I forget, some lower stock. Is Bank of America in the Dow? Anyway, I don't track the Dow. It's a ridiculous index. So that's why this is the only reason why the Dow is not at all-time high, because of this guy. Let's say this guy erases this bad candle. Then the DIA, the Dow, will be in all-time high. So here's one thing that I charted from before. So I'm going to attack it Monday and see if I can buy a lottery ticket to get a new high in the Dow. See this little inverted triangle, inverse head and shoulder. We just talked about it. In theory, we've been in a breakout since there. I don't know if this negates it. I think as long as it stay above half, you're okay. So we could be headed here, but this is the first interesting part. Anyway, so we are at all-time highs except for the small caps. Do we deserve to be up here? I think so. Google, Apple, Facebook, they all reported strong numbers. Apple is on the expensive side from its perspective. Usually it sells at about 18 PE. Now it's above 20, well above 20, because it just recently ran a lot. But in general terms, we do deserve to be up here. We should get a small correction. How big? We should get a 3%, 4% check back to fill some of these gaps we just gapped up and went. It's not mandatory, and all it takes is one giant candle and we'll be done with it. So a dip down to 300 would be totally okay. In fact, 299.5 would be totally okay. A dip down to 296 is totally okay. I expect 294 at some point to close these gaps. If we fall apart for some magical reason on China news or something, and we fall anywhere near that, I will sell puts below here, because all of this is support. For me to get off of this bandwagon, I would need to see a change in the fundamentals. Why am I not afraid right now? Because of the Fed. They're behind us. So they say, don't fight the Fed, don't fight the tape, don't fight the dull market, don't short a dull market. All of these are true. Why do I call it dull? Because nobody believes it and there's not a lot of volume. So they say. They also say, I'm going to use their words against them, the market hasn't done anything in a year. Really? How is it that we are at all-time high? And that year has gone. They keep saying this on CNBC. You know, the markets haven't done anything in over a year. Okay, so this is a year. That's something. From here to here. What the hell are they talking about? 13%. This is in a past year, not a year to date. So we rolled over these, hasn't done anything. But they keep saying them. So, what do I do here? Oh. They keep saying them. I don't know why nobody calls them on it. And if you want year to date, we're up in the stratosphere. So 22%, 20% plus. This is the SPY. So people just say stuff, and then even from the October crash, ledge, we are up 5% from October. So they say the markets haven't done anything. What is this? Haven't done anything. We've had every piece of bad news possible except ash in the sky. That one time where Oslo, I think, had Norway, some volcano erupted. We had ash in the sky, and all of Europe's flight paths were halted. So we've had bad news. And to do this in the face of bad news, this is not a weak market. That doesn't mean I go and load up on longs. I am long. I've been sharing the buy the dips every time. I've been saying, don't be afraid of don't buy into the hype of markets in turmoil. The markets are not in turmoil. The markets are having a tizzy. So one tizzy after another. We will have a tizzy in the next 2 weeks. We should. This is a lot of greens without any breath. All right. Video is already longer than I wanted, but one point led to another, and I think I'm expressing my point of view. I am bullish, but I expect dips. So it's not bears and bulls. Bulls can sell, and bulls can short. You know, I went long the VXX this week for 1 day. Luckily, it was the day where it rallied yesterday, and so it was a hedge against some longs I had. But once I booked the short-term longs, I got out of the VIX. So I am bullish, but I do bearish stuff. So it's buyers versus sellers, not bulls versus bears. Here's another thing that not a lot of people talk about. Just above all-time highs is where all the shorts put their stops. What does that mean? If they're smart, somebody who's shorting markets, what is going on? They short the market, say here, and then they say, well, I don't want to lose more than 10% or 15% in the money, not in rally. So then they put their stops. They'll put it in the system, so or mental stop. If it gets to where I'm upside down 15%, I have to book my losses. And then there will be a short covering rally. There's a ton of shorts that are still too comfortable being short because they're so convinced that this market is going to fall apart because Trump is going to mess it all up. So what if he doesn't? Those stops will trigger. If they trigger, then buying begets buying. You've seen short squeezes. I forget what stock this week had a short squeeze. They don't stop. It becomes like Tilray had the mother of all short squeezes years ago. There was no stock available and people started shorting it, and when their stops clicked, it went from $100 to $300 in hours, and then back to almost zero. But that short squeeze, people were forced to buy it because they needed to cover they get margin calls. When you short a stock, unless you're George Soros, you're going to get a margin call if it goes against you. The broker is not going to be on the hook. So then they have 3 days to cover, and if they're lucky. So then they have to go out and buy the stock. And if they can't find it, they start saying, I'll pay you way more than, you know, how they walk the price up, and buying begets buying. So this is an extreme situation, but that illustrates the point. Crap stock went to $300, and now it's $20, and it's still expensive. So crap stock because of a short squeeze. You don't think that the S&P can short squeeze the 3,200? It sure can. Anyway, Nick signing out. If you have any questions, let me know.